BHEL and Titagarh Wagons Consortium wins a 10,000 crore rupee order for 80 Vande Bharat trains. Both stocks surge about 1.5% in trade. Titagarh's management tells CNBC-TV18 that the government could be looking at 1,000 Vande Bharat trains over the next 5 to 7 years.
Sugar stocks surge, including the stocks like Balrampur Chini, Dhampur Sugar. All of them move higher as global raw sugar prices rally to near 11-year highs. Low inventories and strong demand are driving prices higher in India as well.
Sula Vineyard surges over 5.5% after reporting strong sales growth. The stock now up 8%, and this is after their growth coming in both their own brands as well as wine tourism.
Jubilant Food gains over 2% after Citi reiterates a buy on the stock. The brokerage sees the stock price pullback as an enhanced buying opportunity for long-term investors and expects the company to deliver healthy mid-term margins going ahead.
Time Technoplast rallies over 4% after the company bagged a 50 crore rupee order coming in from Indraprasth Gas for supply of CNG cascades.
Hello and welcome to Chartbusters. I'm Naishal D'Souza, and joining me as always is Mangala Malu. Well, we're holding in the green, though we have come off the high point of the day. The setup is pretty strong. Looks like still we're in a buy on dips market, but let's see whether or not we can get closer to around that 17,800 odd mark. For the time being, though, let's welcome our first guest. We have Manish Hathiramani, who's joining in for a quick technical check. Hi, Manish. Good morning. Thanks so much for joining in. Manish, what's your advice to your clients? I mean, I guess, y'all had taken contra long positions when the markets had corrected. Now, what are you doing? Are you all booking out or are you holding on for a longer ride?
Good morning, Nigel and Mangalam. Thank you so much for having me on the show. Well, we continue being long, even though we did take the contra positions, but those contra positions have now broken out into a bull market. We are very close to the March highs of 17,800. Once we can get past this, the near-term target should be 17,900 to 17,950. However, from a medium-term perspective, I feel this market should achieve 18,200.
18,200. Wow. What are your thoughts on individual stocks? Are there any that can give that sort of returns in the near future?
I'm working with two heavyweights. The first one is on Reliance for a target of 2460, stop loss of 2235. 2340, 2350, these levels have been a resistance for the stock. And it's been almost 2 weeks that we were not able to get past that. Today we are trading above that level. If we can actually keep above the levels of 2350, this should be moving to 2450. The second buy is on HDFC Bank for a target of 1725, stop loss of 1640. The intermediate high of 1645 has been crossed on the back of very high volumes. The overall technical structure suggests a new high.
All right, take that point, Manish. Thank you for joining in and giving us that call. 18,200 for the Nifty. To get that, Reliance and HDFC will have to, HDFC Bank that is, will have to put their hands up, and those are the stocks that Manish is betting on as well. With that, we shift focus to our special segment called Ideas for Profit, coming in from our colleagues at Money Control Pro. Nitin Agarwal joins in.
The stock that I have chosen for today is Mahindra CIE, which is an auto ancillary company. Let me first touch upon industry outlook. Talking about the domestic business outlook, with the waning impact of semiconductor chip shortage, the outlook for the domestic business is very, very encouraging. And with the new orders coming in from Hyundai, Kia, and the orders coming in from Tata Motors and Mahindra & Mahindra, the company's outlook is very promising. In addition to that, the company is expected to outperform the industry by around 5 to 10%, primarily on the back of increasing content per vehicle. Moving on to the international business outlook, the company continues to face challenges in European market, primarily on the back of increase in the cost, oil and energy cost. The outlook continues to be very muted out there. Now, talking about a strategy move that the company has increased, the company's parent has increased its stake from 60% to 65% and has also sold loss-making German truck forging business, which is expected to increase the company's profitability. Now, moving on to the company's valuation, the company currently trades at around 12.88 times calendar year 24 projected earnings, which we believe is very reasonable for a company like Mahindra CIE.
Thanks a lot for that, Nitin. For the time being, though, we'll slip into a short break. Up next, we'll be joined by the management of Navneet Education. After a while, we're getting them on the show. They'll discuss the impact of the new national education policy. Mr. Gala, the MD of the company, will be joining in.
Welcome back. You're watching us here on Chartbusters, and as promised, let's get talking about education. Navneet Education, the company whose books we've grown up reading and studying from, they stand to benefit from the new national education policy. In fact, the last time the management joined us also indicated this as to be the big trigger for them over the next 2 to 3 years. Brokerages believe the same as well. So what could the opportunity be? The street likes it. The stock's at the high point of trade ahead of the opportunity that the management will spell out for us. And we have with us Dhyanesh Gala, who is the managing director at the company. Thanks a lot, Mr. Gala, for joining in. Now, the new national education policy has come by. Could you give us a sense of how big it could be? I mean, I'm reading a report which says that from over 400 crores, this your publishing business could jump to 900 crores purely because of this. Is there a possibility?
Yeah, thanks, Neil. New education policy, of course, got implemented in terms of curriculum change in the CBSE segment, not in SSE segment, where our major focus has been. So for SSE, it's going to be implemented from FY25, that is 24-25. And I'm sure the business at Navneet will be benefited a lot. Having said that, last year, though, our revenue was 400 crore in publications, but that was again a COVID year. But the number that we will have for FY23 will be in upwards of 650 crore. And from there on, FY25 looks to be very, very promising to reach the number that you said.
Okay, all right. Hi, Mr. Gala. This is Nigel here. Thanks so much for joining in. Just focusing on your publishing segment itself. So 650 crores you end with this year. Next couple of years, you're saying 900 crores is pretty much doable. So that's good news. What about margins in the publishing segment? I know there's a bit of a seasonality that plays out, but what should be the rough margin band we should work at for this segment? And also, have you taken any more price increases? I think you had taken a mid-teens price increase in the publishing segment earlier. Go ahead.
So margins in publishing segment for last several years has been between 33 to 35%, and which we are very confident of maintaining. You are right that our business is seasonal, so quarterly margins really is not the right way to look at it. It will be yearly margins, so we are very confident of. As far as the price revision of our books are concerned, yes, we did took a price revision last year because of higher input cost. Which we believe the higher input cost is not going to be further higher going forward. That's our judgment. And based on that, we are not increasing the book prices for the next year.
All right. And what about the stationery business? Where does that go? And there as well, we saw a big compression in the margins. Of course, again, we'll have to look at it on an annual basis. What's the kind of run rate we can expect from the stationery business in terms of revenue and sustainable margins?
So I agree that margins got impacted last year because of higher input cost. We could not pass on 100% incremental input cost to our final product. We believe going forward, the input costs are not likely to go further up, rather may go down. And therefore, we will be back on the margins that we will be able to generate for last several years. And therefore, going forward, even on stationery front, both domestic as well as exports, the margins FY24 may not be as good as the earlier margins that we were enjoying. But thereafter, we are very confident of maintaining the same margins that we were.
Could you quantify maintaining the same margins? Is it mid-teens, closer to 20, lower teens? How does that go?
As far as stationery business is concerned, the margins would be around 11-12% going forward.
Okay.
As far as blended margins for the company is concerned, because stationery business is going a little faster than the publishing business, so our blended margins should be between 20 to 21%.
20 to 21%. All right. What about revenue outlook, sir? For FY24, you have given a fair idea about both the segments. Now, you have given us the blended margins as well. What should revenues look like for FY24 and FY25?
FY24 blended revenue should be in upwards of 1,900 crore.
Okay. And 25?
25, we may add up another 15%.
Okay, another 15% would take the revenue closer to around that 2100 crore mark. On the edtech business, which is supposed to be a big valuation driver for the space, and we've seen a lot of money chasing this space. At the same time, a lot of money getting out of this space as well. It's just all over the place right now as we speak. What kind of financial metrics can you guide for going forward in terms of growth in revenue, reduction in losses, and if there is any value unlocking that you're planning there?
First of all, I should mention here that the usage of technology or digital content in the classroom has been increasing, and therefore Navneet cannot avoid this area or focus on this segment in particular. So we are investing money, time and money in this business. Going forward, of course, we realize that the adoption levels will be not as fast as we were expecting or we saw in pandemic period, but requirement is there. Therefore, Navneet is focusing this area. We have realized that since it is not going to be adopted very fast, we have curtailed certain expenses, and going forward on a yearly basis, though I had guided a little higher, but we will be 50 to 60 crore loss we may incur for FY24.
All right. And what about the value unlocking part? At one point of time, the street was very excited about that K12 acquisition and, the kind of value unlocking that it can be. What's the plan? What is the current stake? If you can just update us, because we're speaking after a while. Do you plan on increasing stake out there? And is there ultimately a plan to unlock some value?
So, first of all, no plan to increase the stake. As far as ownership is concerned, we own around 21% in the company. And the business is doing so well that in a couple of years, maybe next 3 years, many of us, including all shareholders, may have some type of exit plan.
Okay, all right. So next 3 years. Also, I wanted to ask you about the first 9 months is a loss, I think, of close to 20 crores. We all know there's a seasonal factor that plays out there as well, because Q4 is the strongest, where you get 70% of your revenues roughly. For the year means that entire 22 crores of losses gets reversed. So will you break even on Indian income in FY23 itself?
We will break even in FY23 itself.
Oh, okay. So that's a big positive. Just wanted to understand with regards to the boards that you cater to. You said the new education policy has come in from CBSE, whereas your prominence is more in SSE. What sort of education board breakup do you have, and are you planning to diversify to the other boards? I mean, IB is gaining a fair amount of traction too these days.
So, first of all, from commercial point of view, IB is a very, very small segment or small market for us to focus on. Our major business has been for last 6 decades in Gujarat and Maharashtra. So we are focusing state board curriculum of Maharashtra and Gujarat, where the new education policy in terms of content revision will happen from FY24-25. And therefore, we will see better traction starting from FY24-25. The curriculum change has started in CBSE curriculum. And of course, we also have good exposure now in CBSE segment, all India. So there are a couple of changes have already, whatever has been announced has already been implemented at our end. So major revenue, though, still will come from State Board of Maharashtra and Gujarat.
So this 1900 crore and 15% growth guidance that you've given for FY24 and 25 take into account the NELP of Gujarat and Maharashtra, right?
Yes.
Okay. All right. Thank you so much for joining in and giving us all those details. Wish you good luck. And more importantly, from Nigel and me, thank you for ensuring that we studied well through our childhoods.
Absolutely.
So we used to, read through the Navneet Reader's Digest and exam guides, etc. as well.
Obviously, we're a little bit old fogies now, but at that point of time, the EdTech and the likes weren't there. Yes, thanks so much, Mr. Gala, for stopping by, giving us, a take on your business and the path ahead as well. And as Manglam said, thanks a lot personally as well. Well, the stock actually, as we speak, post that commentary, the positive commentary that's come in there, I think it's moved to the high point of the day. Now, let's see how this plays out, because the management is guiding for rather large numbers in the coming 2 years. Well, we'll slip into a short break, but on the other side, we'll continue to focus on markets and stock-specific action. Stay with us. Welcome back. Well, we're holding it around that 17,750, but today the broader market outperformance is something that's telling. The mid-cap index up close to around 0.5%, more number of stocks advancing in comparison to the number of stocks that are declining. But let's focus on a couple of brokerages. Then Macquarie, they have downgraded Eicher Motors as well as Hero MotoCorp to neutral rating. Sonia joins us to fill us in with more details on that. Hey, Sonia.
Well, hi, thanks a lot for that. So as you rightly pointed out, it's a cautious note that's come in both for Eicher Motor as well as Hero MotoCorp. So let me start with Eicher Motor. Macquarie has downgraded the stock to a neutral. They've in fact lowered their target price, but guess what? It's still higher than the current market price. So 3,258 is where the target price is at. They've cut their FY24 and FY25 earnings estimates. Now, the reason for that is that they believe that the commercial vehicle cycle is moderating. So Eicher Motors has not been performing well compared to its peers like Ashok Leyland and Tata Motors, and hence they are factoring in lower multiples for the commercial vehicle business. Apart from that, Hero MotoCorp as well, there's a cautious note that has come in from Macquarie. They've lowered their target price to 26.40. They say that Hero MotoCorp is trading at a 20% discount to its 10-year average, and there is a reason for that. It's because Hero MotoCorp is consistently losing market share in the motorcycle business, in its core motorcycle business. Remember, Honda is also coming out with a 100cc bike, hence it adds more pressure, and all of this competitive intensity will definitely put pressure on margins as well. They've seen limited success in premium motorcycles, and they are disappointed with the traction in the electric vehicle segment as well. Hence, they have a neutral rating, and they've lowered their target price on Hero MotoCorp, and they have downgraded Eicher Motors as well. Back to you.
All right, so that's about Eicher Motors as well as we've seen Hero MotoCorp as well. The reason why I was a little distracted is mainly because I was looking at Jubilant FoodWorks, and that's the stock which has done extremely well. A lot of cheese this morning, although it has been a big underperformer over the last couple of months, and that's exactly the big reason why Citi is bullish on it. The reason that they're bullish on it is that all of us like pizzas, and the company's been expanding their stores. At the same time, they've made a lot of investments in digital and back-end for cost-cutting with Popeyes as well. So with all these things, the fact is that the stock has underperformed. So the recent pullback may provide an enhanced buying opportunity for long-term investors. And that's why, they're bullish on Jubilant FoodWorks with a target price of 619.
All right. Thanks a lot for that, Mangalam. Well, let's also listen to some exclusive conversation now. We caught up with Mr. T.V. Narendran, Managing Director of Tata Steel, on the sidelines of the IMA Awards, who said that despite global headwinds, the Indian economy is looking good because of its focus on building infrastructure. Let's hear out what he had to tell us.
I think, globally, of course, there is some concern because of the fragility of some of the economies. But I think the Indian economy, because of the focus on infrastructure, is looking good. Steel consumption, in my view, should reflect the GDP growth rate. So if we say the GDP is going to grow at 6.5–7%, I expect steel consumption to grow at least that. Our growth will be dependent on the capacities that we build. We are in the middle of a 5 million ton expansion, which should be completed during this financial year, but obviously we'll get the benefit of that in the next financial year. So, well, Europe continues to be a bit of a challenge, though things have improved because gas prices in Europe have come down, electricity prices in India have come down, steel prices have improved. So certainly things are looking better. We have also a challenge because we are relining one of our blast furnaces in Netherlands. So that's going to play out during this quarter as well. But I think certainly we expect the second half of the year to be much better.
All right, with the frontline indices holding up mildly in the green though of highs, the mid-cap index doing extremely well. We wrap up on Chartbusters. But as we do that, here's some somber news coming in this morning. The chairman emeritus of Mahindra & Mahindra Group, Keshav Mahindra, passed away at the age of 99 this morning. Mahindra was the chairman of the Mumbai-listed conglomerate between 1963 and 2012, which got its first start by selling manufacturing utility vehicles. He retired as chairman in August 2012 after heading the group for nearly 5 decades, handing over the position to his nephew, who we now know as Anand Mahindra. Mahindra is known for his philanthropy, also has contributed to the cause of building ethical corporations in India.